Good afternoon, good evening, good morning. Thank you for everyone in the UK that's watching me in the UK housing bubble segment here. Um, Housing prices are declining. It got a little bit of a bump the last quarter, but UK, especially big cities like London, are seeing mass exoduses of people. People in Dublin and Belfast, Edinburgh, leaving the big cities, moving to the Midwest of their countries, seeking greener pastures. Housing market, a bubble on bubble. That's the first time I heard this, and that's why I'm reading this. Bubble on bubble. Bubble on a bubble. Or is it bubble bubble? As experts warn, prices could be overvalued as much as 12%. Experts have warned the UK housing market is a bubble on a bubble, as new figures reveal that property prices could be overvalued as much as 12%. 12% is, but if it drops 12%, it'll put a lot of people underwater. So that's, a kind of a shaky number. 3%, 5%, you're in dangerous territory. 12%, you're going to have at least 70% of people underwater that took mortgages within the last 3 years. A housing bubble could burst in the next recession after being inflated by government and Bank of England policies, Societe Generale de Global Strategist of Albert Edwards told The Telegraph. Property prices hitting new record high in July after surging over 50% in the last decade. His warning came as the International Monetary Fund estimated that prices in some of the world's largest economies, including the UK, may be overvalued by the average of 12 points. The average house price in Britain reached a new high of £230,000 last month. Halifax data indicated a correction in prices would see the average UK home lose about £30,000. So £30,000 off of £230,000 brings it down to £200,280 on average. A lot of people will be underwater. Okay, I take back what I said. If you took a mortgage within the last, I think, 5 or 6 years, depending on what your interest rates were, and if you took interest only, you're hooped. Mr. Edwards said that the decade of loose monetary policy on Threadneedle Street and the Help Buy the scheme have inflated prices beyond reach of many buyers. Hence, the mass exodus of people leaving London to other cheaper, affordable parts. What you are doing is lending them more money, backed by the taxpayer to push up house prices even more. He said. Mr. Edwards explained that while the U.S. property prices corrected back to normal levels following the financial crisis, the U.K. market has become a bubble on top of a previous bubble. I could say that also about Vancouver, and I could also say that about Toronto. Well, Toronto's kind of weird because it was an anomaly, but I could say that with Sydney. I could say that with Auckland. I could say that with a couple other cities floating around. California, Los Angeles, yeah, for sure. San Diego, quite a few cities. Actually, there's quite a bit I can mention. Economists at the world's lender of the last resort also blamed ultra-low interest rates imposed following the financial crisis by fueling cheap borrowing and therefore boosting demand. IMF's report argued a policy that controls rents tends to raise house prices, a policy mooted by the Labour Party at the last election. It explained rents and restrictions can create a lock-in effects where renters remain in the space that may exceed their needs, reducing the overall supply of housing. And that also reduces the, especially if rents are going up and buying power for the middle class, disposable income starts to diminish and disappear. So once the middle class stops buying and purchase power goes down, you start to see a lot of layoffs happening, and a lot of small family businesses that can't take the hit have to close their doors. And that's what you usually have in the retail sector, that is. And in some in the service sector will have to suffer too. Unfortunately, that's what usually happens when it was good when interest rates were at 5-6%, and people knew what they could spend and how much they could save and how much they could get out there. Anyways, guys, if you're from the UK area and you want to be on my show, I'd like to have you on a UK discussion, and we could discuss what's happening in the United Kingdom. We could start what's happening in London. We could go on to see what's happening in Belfast and Dublin, and we could move on to Edinburgh and see what's happening there. And maybe we could somebody could help me co-host the show and discuss mass exoduses from certain cities. I also want to talk about how employers, especially in Dublin, have to pay first and last month's rent of their graduates from university that can't afford to move into the big city because they just can't afford to. They can't afford to live where the job is being offered. So you got the pressure you got the pressure on the employers too. Like, what do I do? People can't live in the city where I'm going to pay them, but uh, I need these employees to be qualified to work for me. What do I do? So you see a lot of people in Ireland moving to the Midwest, or is that Scotland Midwest? I'm not too sure. One of the two, leaving some of the bigger cities and commuting 1 to 2 hours to get into work. But I mean, time is money, guys, and you're commuting. Find something to do on a train or on a bus while you're commuting on your downtime to make you some money. You know, I'll do a show about making money on your downtime. Let me know what you guys think in the comments below. If you're in the UK, please contact me through my Facebook page or contact me through my Facebook fan pages in Portuguese. Don't panic, it replies in Portuguese. Or Instagram, message me on Instagram. Let me know what you could, if you could be on the show, and then we could do something if you could call me or something. Let me know. Thanks for watching, and big hug to everyone watching in the UK.